Okay, good afternoon, everyone. This is Matt Braden from the GPAR professional staff. Hope everyone is doing well on this hump day, Wednesday. A little chilly out there. But before we get started with the actual presentation and everyone has tuned in for, there's a couple of housekeeping things I need to take care of from our end of things. So I dropped in the chat there a link to the Realtors Feed Philly Virtual 5K. So our Horizons Committee is organizing a virtual 5K to benefit Phil Abundance. You get a cool T-shirt, good things happen in Philadelphia on the front, and then a couple of things on the back. $20 is the registration fee, and we're looking for people to raise some money for Phil Abundance. They really need it now more than ever, particularly during the COVID pandemic in which we're currently in. Lots of hungry people out there in our city and in the area, the Delaware Valley area. So the need is greater now more than ever. So we can hope you guys will consider being a part of that. Other things we have coming up. Tomorrow, we have the Converting Contracts into Clients workshop, and that's presented by Janice Benstock. Email went out to all members with that login information. So that's tomorrow morning at 10 o'clock. And then we're going to wrap up this week with Coffee Talk. It's a different day. We usually do that on Monday. We usually kick off the week. This time we're going to wrap up the week with Coffee Talk, and we're going to have special guest Hank Lerner. He's the head legal guy with the Pennsylvania Association of Realtors. We're going to hit on things with the legal hotline to operating during COVID to the new Code of Ethics rules that were recently put in place by the National Association of Realtors. So we're going to hit on a whole bunch of stuff with Hank. So we're looking forward to having him in there with us, and he'll also take some questions from all of you. So join us for that. Usually it's about an hour long. We try to wrap that up in quick order so you can go about doing the rest of your work during your day. So with that, I want to extend a word of gratitude, and that is to Bright MLS. Thank you very much to Bright MLS, Joy and Brian, and the entire shop over there at Bright MLS. They are our sponsors for today's session. So we're very grateful for their support. They're really good to us in a lot of other ways as well. So it's really nice to have them helping us out with this event that we have here today. So with that, I'm going to hand it over to our organizers of this great event and this Zoom meeting. So who wants to take the mic and carry this forward for us?
Good afternoon and welcome everyone. Thank you for participating in this, the third part in our three-part series on diversity inclusion, partnership with GPAR and the Philadelphia Metropolitan Board of Realtors. I am Anastasia Dewan. I am a board director and also chair for the diversity committee, along with my vice chair, Annette Collier. Thank you to her and our entire committee for helping to put this event together. And just want to thank you all again for participating. Thank you for participating in our past series, and we look forward to having you all back again for more things to come. Thank you again to Joy and Bright MLS for your sponsorship. And just special thanks to the Philadelphia Metropolitan Board of Realtors for partnering with us again.
Realtors.
And Realtors, excuse me, to make this happen. Of course, have to say the Realtors. So,
yeah.
So Darlene Meekins is our local president, and she is going to introduce herself, and we're going to get right into the program.
Greetings, everyone. I want to just thank you all for attending today. We're happy that you're all here. I am Darlene Meekins. I'm the president of the Philadelphia Metropolitan Board of Realtors. We are the local board of the National Association of Real Estate Brokers, the oldest African-American professional real estate trade organization in the country, and we always welcome new members. We advocate for democracy in housing and conduct events and workshops for our community and members on housing and building generational wealth, along with supporting and advocating for housing issues. We call ourselves Realtors, and listen closely because a lot of people don't know this. We call ourselves Realtors because back in 1947, when the national organization formed, we as African Americans were not allowed to be Realtors. But today I can say that I am a Realtor and a Realtist. I'd like to thank Bright MLS Joy for sponsoring this event. Definitely, we appreciate that. Also, I want to thank Matt, Anastasia, Annette, and all of those on the team, Rachel, Chris, that helped put this event together today, and our speakers for participating and bringing us this information. And then last but not least, I want to thank the audience for attending here. And I'm sure there are plenty of other virtual calls you could have been on or helping with virtual homework today. So thank you for coming. I hope you enjoyed this workshop today, and we look forward to sponsoring many more in the future. Thank you so much. Chris?
And Darlene, me, you hand it over?
I'm handing it over to you for.
Oh, great. Okay. Welcome, everybody. My name is Christopher B. Sample. I'm the first vice president of the Philadelphia Metropolitan Board of Realtors. And I have the pleasure of introducing our first speaker, Ms. Della Clark. Della has been the president of the Enterprise Center since 1992. The Enterprise Center serves many roles in Philadelphia and beyond. It engages nearby residents and develops community real estate projects. It directly supports aspiring entrepreneurs, particularly those of color, and it distributes capital to help those entrepreneurs grow their businesses. Della's many accomplishments over her 27 years as the president of the Enterprise Center include the renovation of the birthplace of the American Bandstand at 46th and Market, the development of civic and youth engagement programs, the Walnut Hill Community Farm, a food business incubator called the Dorrance H. Hamilton Center for Culinary Enterprises, and Doris Hamilton was the owner of Campbell Soup. $6 million in loans distributed, as well as $557 million in contracts awarded to minority and women-owned businesses. The Enterprise Center has coached. These entrepreneurs have created over 2,000 jobs and helped strengthen and revitalize their community. So I introduce some to Della Clark from the Enterprise Center.
All right, thank you, Chris, and good afternoon, everyone. And I have to recognize my good friend Max from Fulton Bank and appreciate Fulton Bank as one of our supporters and sponsors of some of our work at the Enterprise Center. So as Chris mentioned, the Enterprise Center has done quite a bit over the past 30 years. And one of the things that we've recognized over the 30 years is that many times we were focused on programs. And so what we're focused on now for our future is really how do we realign the ecosystem and focus primarily on capital. Because what we have found out has been the #1 disruptor of small businesses, and particularly minority enterprises, is capital. You know, when you don't have a family and friends that you can turn to put together $100,000, $200,000 to do proof of concept or get over the hurdle of an early stage business, you're really strapped to use credit cards, piecemeal funds. And so the Enterprise Center is very much focused on how do we realign the ecosystem for capital and try to bring what we call blended capital to the marketplace. So the next slide, Darlene, thank you. And so I just want to tell you briefly about the Enterprise Center, what we're focused on. Not only are we focused on building our own capacity as an organization, but we also focus on building the capacity of our small businesses that we work with, because we recognize that you have to build capacity in order to be able to have sufficient resources and staff, whether they're contractors or employees, to help you achieve your revenue goals. The second thing is that we're very much focused on raising more, improving our capitalization and raising about $20 million. Now, to date, most of the funds that we have deployed have not been for real estate projects, but have been primarily for working capital for small businesses. However, we are in the midst of trying to raise $50 million for equity fund that is going to be called Innovate Capital Growth Fund. It is what you call a small business investment company license with the SBA, and that license is pending now. And then finally, we have pretty much adopted 52nd Street. I don't know if you recognize, but as a result of three different
I'm on a Zoom call.
Significant impacts, we've had the pandemic, which has impacted 52nd Street. We then had George Floyd death, which had a significant amount of looting. And then most recently, we had Walter Wallace death. So between those three things, 52nd Street has taken a major hit. And so we are in the process of raising about $200 million to try to revitalize 52nd Street. So next slide. So this slide, okay. So this slide just tells you a little bit about our history. We have 39 staff people now, and we anticipate over the next 3 to 5 years adding about 6 more people in order to achieve our goals. But this is just our timeline of, you may not can see this. Darlene have this slide. If you want it, she's welcome to pass it out to everyone. The next slide. This just tells you a little bit more about the Enterprise Center and the different divisions that we have. We operate 2 federal centers. One is under the U.S. Department of Commerce, the Minority Business Development Agency. It's called MBDA. And then we operate under DOT, what they call a SBTRC, which stands for Small Business Transportation Resource Center. And that is to follow transportation. We work with SEPTA, City of Philadelphia Streets Department, airport, and anything that moves on wheels, railing, we are involved with in terms of federal funds. And then we do also community development, or we actually purchase buildings, renovate them, and work with small businesses. And then finally, where we're focused the most right now is on capital. I know Jennifer is going to talk about CDFIs. We are a certified development financial institution as well, which is how we have many of our banking relationships. Next slide. And so this is a little bit, tell you about our work on 52nd Street and what we're doing. So we are taking kind of a 6-prong approach. We are looking at the retail mix. We're looking at upper floors. When 52nd Street was built back in the turn of the century, the merchants actually lived at the store, and the entrance to their second floor was at the back of the store. And so when you go on 52nd Street now, there is no egress to the second floor. So many of the buildings that we're planning to work with will have to be reconfigured so that you have interest on the second floor. And that's why many of the second floors do not have any dwellers, because currently today, the merchants do not live on 52nd Street. They live in Upper Darby, Delaware County, even in Delaware and other parts of the city, and commute back and forth. We're putting together a real estate strategy. We're looking at public realm, trees, sidewalks, streetscape, and how do we make those improvements, as well as facade and storefront improvements. And then looking to make it more of an experience center, whereas currently today it is cheap, destination, quick spend. And we want to try to make it more of a arts and culture, more of an experience center. We have one of the most historic sites, which is Bushfire, and we're working with Al Simpkin to do many things. You'll notice there, we've added a new roof there. We've added brick pointing and just trying to bring back the infrastructure on 52nd Street. And so I have some data there. You probably can't see it, it's too small. But there is tremendous amount of leakage on 52nd Street. And as we think about the retail mix, the goal is to try to stop some of that leakage, as well as position 52nd Street so it can attract purchasing power and recirculate those dollars in the community before they leave. Ideally, we would like to make 52nd Street the Black Wall Street like Tulsa, Oklahoma was years ago, and have most of the merchants identified on 52nd Street to be minorities and immigrants. The final slide is, and Chris knows about this slide, but I was part of a larger group that put together a national landscape for small businesses. And so I looked at that national landscape and said, well, what can we do here in Philadelphia that can kind of take the best of what I've learned? And so as we think about Philadelphia's ecosystem for small businesses, my opinion is that it needs to have four major components. The first one being contracts, working with anchor institutions, which is both medical, education, the private sector, and the public sector, to see how we can perhaps do about $400 million a year in contracts over the next 5 years. So we need pledges from these anchor institutions saying that they will do business with minority firms. And it could very well be realtors and real estate firms and other entities as well. The second ecosystem that we need to tie closely knitted to contract is the capital piece. And so out of the 300 million through Innovate Capital, the goal is to raise 200 million in equity. And equity is where you would actually take investment positions with entities that want to either do real estate or do business or do mergers, acquisitions, and 100 million would be to garner participating banks in the form of loans and lines of credit. So we think that in order to do the $2 billion, it needs to be closely tied to about 300 million in capital. And then finally, these are two auxiliary components. And it's really of the consideration that if you get a blessing, whether it be a contract or access to capital, and you able to grow your business as the leader and the founder, that you then figure out how you build capacity in your organization to be a leader in the community and lead the way. And then secondly, to help make investments in the community. We don't want to see businesses all think of only being downtown where the grass is green and the sidewalk paved. We want them to bring their purchasing power to commercial corridors throughout the city of Philadelphia, which are the front doors to neighborhoods and communities. And many of them are in distressed situations and need to be revitalized. And we think that small businesses can play a major part in that. So we want to see small businesses take up ownership on commercial corridors, hire people from the community, and help lead the way. Philadelphia still remains one of the top poverty cities in America. And the only way that's going to change is that we all work together, take a collective approach to bring about the change we want to see. So those are my comments, and I will wait, Chris, and Arlene, we open up for questions and answers.
Okay. Who's doing the next intro?
I believe that's me, Chris. Thank you so much.
Okay.
Yep, good afternoon, everyone. This is Jennifer Brower. I'm the Community Outreach Officer with Fulton Bank, and I'm so pleased to be here today, and I'd like to thank GPAR and PMBR very much for their partnership and for having us here today. We certainly appreciate the opportunity. And I just wanted to share with everyone briefly, some of the work that Fulton Bank does in the community as it relates to small business. We do a lot of work in a number of different fields, including affordable housing and financial education. And I really wanted to focus on small business today to provide you with some resources that could be helpful, with the work, that everyone is currently doing. So Fulton Bank has an innovative partnership with an economic empowerment nonprofit called Operation Hope, where we provide free small business development coaching. We recently brought on a new small business development coach that actually has, a number of years in the banking industry, and he really can prepare small businesses, that are just starting out in that 0 to 3 or 0 to 4 year old startup phase. He can provide them. His name is Isaiah Price. He's our small business development coach with Operation Hope, and he can provide small businesses primarily in the startup phase with every aspect of small business planning, whether it's putting together your small business plan, honing it, making some tweaks, getting additional information, insight, and counseling about how to become capital ready, with financial institutions or community development financial institutions such as the Enterprise Center and other extremely viable CDFIs that we have in the local community. And one of the best things about our partnership with Operation Hope is that the services are 100% free. There is absolutely no cost for any small business owner that's interested in getting those services and the free one-on-one counseling or having certain questions answered. There is absolutely no cost. And whether that small business owner needs help for 1 year, 2 years, or just a few months, or maybe just to answer a few questions, it's a very flexible, partnership. And so, for more information, about that partnership or to contact Mr. Isaiah Price directly, please feel free to reach out directly to me, and I'd be happy to, make the introduction and share the information, because we definitely want the community to be well aware of this important partnership. Fulton Bank also has a partnership with SCORE, and SCORE is a fantastic nonprofit organization that also provides free one-on-one business counseling, small business counseling, as well as workshops in the virtual capacity in the current environment. And we really valued the relationship that we've established with SCORE. This is a newer relationship that we established this year in 2020, and we're making a lot of great headway, as well. SCORE is also a very valuable resource for all businesses in every phase of their development. For the more established businesses, SCORE can also be very helpful, with regards to providing the one-on-one business counseling and additional resources and the workshops. And as Ms. Clark had mentioned earlier, with regards to the community development financial institutions and the Enterprise Center being, an extremely viable and important partner to Fulton Bank and the community, we also have some great partnerships with the Community First community CDFI, which actually hails from Lancaster, and they have since merged with another CDFI called Finanta. And so Community First, has an incredible niche area, and that they focus on community development lending. In Fulton Bank, we also have a very well-established partnership with, a very well-established department with community development lending. For those that are interested in moving into the affordable housing development space, the new markets tax credits, the low-income housing tax credits, and the best thing I would say about Fulton Bank and Community First Fund is that we're open to partnerships. We definitely play well in this sandbox, as we look to partner with other community organizations and other financial institutions to make these types of deals that benefit families and communities to make them viable. In addition to that, Fulton Bank also has a partnership with Entrepreneur Works, which is also another CDFI that is really, special in terms of providing, financial services or loans to those that are returning from incarceration or returning citizens. And so we would certainly be happy to share additional information and contact information, for those of you that would like to learn more or gain additional information. All right, and with that being said, I will go ahead and introduce my colleague, Max Tabak, who is the Senior Commercial Relationship Manager with Fulton Bank. And so Max is an innovative and seasoned banker possessing over 20 years of experience in commercial banking in the greater Philadelphia area. His background encompasses risk management, commercial credit and portfolio management, financial planning, and business development. Max joined Fulton Bank in 2017 as a senior commercial relationship manager. He's involved in a wide variety of civic and charitable organizations in the Philadelphia area. Max received his bachelor's degree in business administration with the concentration in risk management and human resource administration from Temple University. He resides in the Philadelphia region with his teenage son. So Max, I will now hand it over to you. Thank you.
All right, thank you, Jennifer, and thank you to the Greater Philadelphia Association of Realtors and the Philadelphia Metropolitan Board of Realists for allowing me to speak today and allow me to do a presentation on Fulton Bank and some of our commercial banking products and services that can be tailored to some of your customers as you're out there meeting with people day to day. So I'd like to just give you a little bit background. Let me see if we can do it. I can share my screen so it's a little easier. Is that working better? No. Oh gosh, okay, never mind.
Are you sharing,
I'm
Max?
trying to share, yes, so it's a little easier, but let's see, there we go.
If not, I believe I have your presentation.
Okay, yeah, I think that might be better. Let's see if this works. Okay, let's try. Yeah, could you share your screen? I apologize, I'm having difficulty.
Yeah, no problem.
Okay.
And this is your presentation.
There we go. Okay, we can go to the next page. That'll be great. Just a little background of Fulton Bank. Fulton Bank was founded as Fulton National Bank in 1882 and became Fulton Financial Corporation in 1982. We're about $22 billion in assets. We are a regional bank headquartered in Lancaster, Pennsylvania, with a huge presence right here in Philadelphia downtown. We have over 235 branches throughout 5 states. And we're conformed to a variety of divisions such as Fulton Financial Advisors, Insurance Services, and Fulton Mortgage Company. We are traded on the NASDAQ, and you're welcome to visit our website at fultonbank.com. Just a little background of why we are different than some of the banks out there, or why we are competitive as some of the banks out there. Our local decision-making is done right here. So myself being included is involved in the decision-making process, both on the commercial side. So if your business, if you're out there introducing businesses to perhaps real estate, potential purchase of real estate or potential purchase of business leasing or anything like that, their decisions are made right here in Philadelphia. We offer a client approach where we really communicate with each individual, and we have a proactive relationship where we get all of our partners involved. So you don't just deal with one person, you're dealing with multiple people. Can we go to the next page? Sorry. Okay, we can go to the page after that. All right. And just a little background on what I do. As a relationship manager, my primary duties is really, I call it as a concierge, to offer services to a business client. So as a business client comes by and says, I am looking to purchase a building, I am looking for capital for my business. My job is to obviously present it to a loan committee regarding their credit need, or my job could be if they're looking for deposits, cash management, maybe merchant services, or perhaps a business owner is looking to purchase their own home. I would introduce them to a residential mortgage loan officer internally within the bank. So I work really as a client first point of contact. So go to the next page. A little background of our commercial banking and some of our products and how that can benefit your clients or yourself. So for example, you have a client who are saying we have we're looking to rent a retail space, and we're looking to purchase a space to open our retail facility, and we need credit. This is where we come in. We meet with the client. We really overview what their needs are. We assess their cash flow. We assess their debt service. You know, what could they afford today based on what they have currently in their bank, based on what the sales price is, and based on, you know, what can they afford in their monthly payments. So our proactive account management, like I said, local decision making is a big part of it. We also, as mentioned earlier by a good friend Della over there, we also work with CDFIs, community financial institutions. If we can't help, we work with CDFIs, we introduce them to help them. Some of the CDFIs we work with on the business side is obviously the Enterprise Center is one of them, Impact Loan Fund, where we are able to guide them for additional services perhaps that we can't do, but we can partner up to see if we're able to meet those needs, to meet the borrower's need. Some other things we do about it, customizing solutions. We offer our commercial banking, we offer specialized services. If you can go to the next page, what that means is if your client tends to be looking for commercial real estate as an investment opportunity. So there's 6 divisions. Our agricultural services, which obviously we won't see here in Philadelphia. I'd say more out in Lancaster. Our commercial community development, which is what Jennifer Brower was just talking about. Our commercial real estate division, which is what I work with as well. Our dealer services, which is our auto services, floor division. Our healthcare, banking, and senior living communities, and our Fulton leasing company. And then we have other Fulton teams that we work with, including our nonprofit services, which is, I pointed out specifically nonprofit services because I wanted to quickly touch on that. One of the things that we do here at Fulton Bank is we offer nonprofit lending, which means that also includes religious institutions. A lot of banks out there do not offer religious institutions an opportunity, meaning a church, a mosque, a synagogue comes to you and says, we're looking to acquire a building to move our facilities to. As you know, some of the larger banks do not want to take on that credit, that risk. Nobody, I would say, no bank wants to foreclose, if God forbid that happens on a church or a synagogue or a mosque. We look at that religious institution as unique. We look at to see what they have in a bank. We look at their membership units, their donation units, giving units, we call that, and we're able to do it. So if you're out there with any churches, as I said, religious institutions that are looking, we will do financing for them. If they're looking to buy a building, if they're looking to expand their building, they're looking to renovate their current building, we will do that credit request. In addition, I want to also talk a little bit about our equipment financing. We can go to the next page. So as a business comes to you, another thing where we compete with other banks, one of your business customers comes to you and says, we are looking to acquire computers, technology, acquire commercial printers for our office space. Those equipment pieces are very expensive and not everyone can afford to purchase them. The advantage of leasing is we will lease up to 100% of that, 100% of the purchase price. For example, if your lease is, let's say, $20,000, we will give you that $20,000 lease, a 100% lease. At the end of the lease of whatever the timeout, there is a buyout of $1. So at the end, you will own the equipment. You will buy it out at $1. But the advantage it is to you as a business is that you can finance 100%, whether if it's a truck for your business, if it's computers, or any other type of equipment that you may need to build out your space. In addition, one second. And in addition is we do offer flexible structures to terms, unlike some other leasing services. So for example, other leasing divisions may only offer you a 36-month, which is a 3-year, a 60-month, which is a 5-year, or perhaps a 72-month or 74-month. We will tailor that finance term directly to your need. So if you say that I need a 24-month, a 2-year term specifically to meet with your budget or with your guidelines, we will do that for you. Again, it's all case by case scenario, which is an advantage, again, of being a regional bank where we can make these decisions locally. Let's go to the next page. Another service that we offer is our Treasury Management, and that consists of 3 pieces. Cash management, which is, again, your day-to-day cash banking, which is your deposits, your ACH services, your remote capture services, which is your scanning, your depositing your checks, your international banking. For a regional size bank, we do offer an international banking. Any business today, from small business to a large company, needs to conduct business. If they're a manufacturer, if they're a distributor, need to conduct business, let's say with India, China, wherever, and may need to conduct business in that currency, or may need a letter of credit, so they could do business. We are able to provide you that letter of credit, that currency need, or even that line of credit in that currency. Again, that we work hand in hand with, as a relationship manager on the commercial lending side, I work hand in hand with our international department to make sure that we could provide that, so that way you can get the equipment, the inventory, whatever you may need from overseas, and still be able to run your business day to day without any interference. And then another piece of the Treasury Management is our merchant card services. You accept credit cards, or you'd like to have a credit card as a business, we do that for you. So we can that way you can process whether if it's online or in retail, right, as you swipe as needed. I guess my final piece I'm going to wrap up is, why choose us, right? So we've been serving customers like yourself since 1882. We are not a typical large bank. I'd like to stress that very well. I'm not saying there's anything wrong with any bank. We're all banks and we all work here, and we're all created equally, and we work here with one vision to serve the community. But the advantage, again, for a lot of smaller businesses, or I should say, or a business, maybe not a large commercial company, is that to have that local decision making, to have the local decision contact is very important. To have a relationship manager that also has lending authority is very crucial when making a decision in how your business grows, how your business is able to grow, or the cash flow need your business may need. And also, obviously, we provide stability and values to our local community. As a community bank, we work with small businesses. We work with local CDFIs, community development financial institutions. Again, mentioned the Enterprise Center, Impact Loan Fund. We work together to make sure that we can provide the cash and the capital needed to help your business grow. On that note, I'm going to wrap up, and I will leave questions until the end as well. Thank you, everybody.
Thank you, Max. And thank you to everyone who has presented thus far. Regrettably, our 4th and final panelist had a family emergency, so we want to just say thank you for her consideration and also give her our well wishes. Her name was Ulysses Lawrence. I don't want to butcher her second last name, Oladende. She was scheduled to speak on the real estate as a first or second career for re-entering citizens and veterans, as well as what Temple University had to offer by way of real estate education. I will read you her bio, just so you know a little more about her, and we will be providing her contact information as well as some content that she was prepared to share with us. So Ulysses Lawrence Oladende is the Director of Community Education at Temple University's Office of Community Relations. Ms. Lawrence Oladende coordinates the Pan-African Studies Community Education Program, which has provided community engagement and resources sharing for more than 40 years on Temple University's campus. Her passion is in developing programming through the Workforce Connection Hub for re-entry services, digital inclusion, and the transformational education for all community members. She is an active executive board member of the Reconstruction Inc. organization, and all of that will be shared with the group as well. So we want to thank her and again send her our well wishes. And from there, we will get into a Q&A. And let's see what we have in the chat box. I actually can't see anything in our chat box from my end. So
if you don't mind, Anastasia, can I start with a question?
Yes.
Okay. So what in these times today, when we're looking at a lot of urban areas, and this is for Della and Max, when we're looking at a lot of these urban areas, right, and what's been happening to them, a lot of people are moving out of those particular areas. And I think that this is a great opportunity for the minority community to go back in and reclaim some of these areas. How do you propose, especially people like us who are real estate professionals, begin to help people like that come in, purchase these buildings, develop businesses that are apropos to the area and to the client base there as real estate professionals?
Well, I'll start out. I think the real estate professional has to decide their role. So the first role would be, would you want to be just an intermediary where you don't control the real estate, but you serve as an intermediary between like an ambassador for that corridor, trying to get people to populate there. Now, in that particular scenario, the rule of thumb is that if you don't control the real estate, you just have an opinion.
Okay.
Right? Okay. And so in a lot of cases, you need to control the real estate if you want to see the change that you think the neighborhood or that commercial corridor should realize. Because it's hard to be an ambassador on a neighborhood and you don't control the real estate.
Right.
And so if you want to control the real estate, then you're going to have to build a balance sheet, right? And you're going to have to look at debt to equity ratio and learn what they call asset-based financing, which means if you find a building, you got to do the research on that building and figure out how do you put together the financing for that building and use that building as a portion of the collateral that's required in order to get it financed, and then look at what it would cost to get it rehab. And that's been one of the biggest challenges in building a real estate portfolio, is the need for capital in order to acquire, and then you have the carrying costs of that building until you're able to stabilize it and raise the money for renovation. So that's been one of the biggest challenges of minority enterprises, both real estate and non-real estate, which is why the Enterprise Center is focused so much now on capital, because we found that to be the #1 disruptor.
Mm. Okay.
Excellent.
Can I jump in as well? I actually like to second something to what Della said. So I want to say, we've all heard cash is king, right? That we all heard that cash is king. Well, real estate is queen, right? You can't do one. That's and exactly what Della mentioned, you know, the capital that requires to obtain that real estate. And this is where I believe the real estate professionals are very important. It's all about educating the consumer, educating your client, you know, educating them on what is necessary for them to come in to acquire these properties, to place a business into these properties, educating your client. And that's probably the key tool to making sure that they know, you know, when they are buying investment real estate or any kind of, or owner occupied residential or investment, a commercial, you know, they know what their ROI, what their return on investment is, you know, what's going to the debt to equity ratio, how much they have to put up front versus, you know, perhaps versus what they're going to make on the back end. So a lot of that comes down to the realtor, I think, really understanding the commercial business as well as residential, but also understanding the commercial business and you know, what's in it for the customer, what's in it for your client.
Mm. Okay.
I think that's excellent. So one of my questions is going to be how we kind of transition that realtor or that investor into an actual business. So a lot of people starting out are just doing their business with their personal stuff, how would one of you transition that particular realtor into doing a organization, a real business organization, so that they can become more valuable and leverage the experience that they have?
Okay, this is what I tell most entrepreneurs, is that most entrepreneurs start with what they have today. I would suggest that you sit down and you think about where you want to be 5 to 7 years from now. And you visualize that and you put that on paper. You know, how many buildings you want to own, what would be the value of your real estate portfolio that you want to have 5 to 7 years. List all of those things. And then you come back to today and say, here's where I am today. What do I need to do incrementally each year so that in 5 to 7 years, I have that portfolio? And so what it requires is that most time people will run numbers on a building or run numbers on 1 or 2 buildings. What you need to think about is putting together kind of a mini prospectus, right? Because if you go to Max, the Fulton Bank, for money, he wants to know not only about that building, but he wants to know about where that building is located and the appreciated value that surrounds it. So the more you can go into a Max at Fulton Bank and paint a picture of that corridor and how your investment is going to trigger that appreciated value, that helps in terms of you then going back to Max for the next building on the same corridor, the next building on the same corridor. Because what happens to a lot of people is that they buy a building over here, then they run over here and buy a building. You cannot build your real estate portfolio in a scattered approach. It really should be in a real concentrated approach. You know, most real estate developers focus on a whole section of town, right? A whole section area versus a scattered approach around the city. And that would be one of my suggestions in how you build that portfolio. It certainly takes a lot of time.
Yeah.
Thank you. We have another question from the chat box saying, during the pandemic, businesses are going out of business on a daily basis. How can these buildings or businesses be repurposed?
That's a good question. So I will say this, people right now who have equity, right? Not equity, I'm sorry, who have cash, have liquid assets, they're the people that are going to acquire a lot of this real estate, probably on a cheaper end, especially commercial real estate. We know that commercial real estate right now is in major risk. You know, a lot of businesses are not going to be utilizing office space. These restaurants, small retailers are slowly closing. And that is a big, that in banks, not just here at Fulton, but I have friends at other banks, that is a big discussion that we're all having. You know, what's going to happen with a lot of that real estate. So people who have the assets right now will acquire those properties. And if they can sit on them, what goes down must come up, right? And eventually this property, the real estate will come up. So if there is commercial real estate and you can acquire it at a price, at a lower price than what it would normally go on, yeah, you might not be able to open retail space today, but 2-3 years from now, if you can sit on it, you'll be able to do it. Or you can repurpose it, repurpose it into office space, repurpose it into, again, this is where realtors come in. How can a realtor advertise the space? If this is a retail space, what else can they advertise it as? Can we bring in an additional partners? Can we look at other cities? There's other cities that are being affected. Maybe those commercial customers can come from other cities to do business here, especially being that everything is done remote. So I think that's a big part of it is, commercial real estate is right now at risk, but I think if you have the assets to acquire it, I think you're in a great space if you can do it. If you have the clients who are looking to acquire right now and have that cash, I would highly recommend this is probably the best time to do it.
Thank you. The second part to that question was, what, if any, financial services are there available that you have available to offer in order to keep these businesses in business?
We have working capital loans that we can try to defer the principal and make it interest only for a period of time, and try to work with people's current situation and try to help them out, because the most important thing is trying to keep businesses afloat. I personally believe that there are silver linings out of the situation. If you look at the economy before the federal shutdown in March, the world was in a different place than it is today. You know, we were laughing earlier about how under this whole virtual environment, no one wants to go back into the office environment because people are enjoying working from home. I personally enjoy only dressing from the waist up. So I'm really enjoying the virtual environment. And so I think there are silver linings. The key to being a good business person is knowing how to pivot, and how to pivot quickly, and how to take advantage of opportunities. And it's amazing. And you just have to think about it and figure it out. But you don't necessarily have to have a whole lot of cash. You just have to be smart and figure out how you collaborate, and how you take a collective approach, and how you partner. Too many times we don't want to partner with each other. We have to learn to pool our resources together, right? And buy that building together. Yep, there could be challenges, but you got to work together. We got to take more of a collective approach. We cannot do it by ourselves. We don't have enough resources to do it. So I really encourage, you could do pop-ups in spaces. You know, if you own real retail spaces now, consider doing a pop-up for Christmas, you know, a pop-up for certain other type products. I can tell you right now that while restaurants are struggling, if you are geared for takeout, you can make money. Okay.
Yeah.
Because
Yeah.
takeout is key right now. People still don't want to cook in a COVID situation, and they still going to eat. But if it's a sit down dining, yes, you cannot have customers in there, but takeout is really good, right? So I think pop-up takeout restaurants, if you're in a restaurant and you can find yourself a chef, there's ways to benefit, and there are ways to take advantage of the silver lining of this pandemic that we're in.
I have, there's another question in the chat box. How many years do you think it will take for the city to become prosperous again, economically speaking?
I think it depends on the industry. McKinsey just came out with a study that said that they think hotels will not recover to around year 2024. There are some industries that will recover sooner, right? But hotels are in trouble. They're saying 2024. You know, they had predicted airlines was going to struggle, but as a result of Thanksgiving, you saw that people were brave and travel. So it's uncertain about airlines and travel, right? Sports is really struggling right now, if you think about it. Philly just laid off 80 people. The fact that these stadiums do not have people buying hot dogs, buying beer, buying French fries, that's putting a lot of unskilled workers out of work. So we really need certain industries to come back. But I think on the average, what I understand from McKinsey, it's going to take at least at a minimum 3 years. 3 years.
The thing that I wanted to mention, and this, I was reading this actually in is this is a very different type of, recession. This was an induced recession, and only certain industries are the industries being affected, such as hospitality, restaurant, food services. And again, not even all food and services, like exactly what Della was saying, sit down restaurants. So because of that, it's very hard to say when everybody's going to, because realistically, cleaning companies right now, or, any kind of sanitation, they're doing they're showing profits, more earnings this year than they have in the last 5 years alone. So it's very hard to say which company is going to, which business is going to survive and which isn't. What is interesting to say is that because this is an induced recession, it's a very, we may be very quickly out of it within a year or two. However, there is definitely industries that are going to be affected for multiple years this is a very different type of recession as it was in 2008, where really such, I would say, quote unquote, white collar industries like banks, insurance companies that were in trouble. This is more affected to each specific that are more service based. So it is definitely it's a lot harder to say. And I don't think anybody out there, any economist can give you an exact number.
Right.
Thank you.
But the key to this, Max, you probably would agree with me, the key to this, or the downfall of this, is that this downturn is impacting unskilled workers.
Absolutely.
And workers that look like me. And that's our challenge, because the employment of these people, because they were in that service industry.
That is correct. That's definitely is as you mentioned, the unskilled worker is definitely affected more, which is why we're seeing, which is why it's a lot easier, quote unquote, easier to see, which is why some of our economic, such as our stock market, hasn't really changed. The stock market has actually shown consistent growth even after the elections. Actually is doing really well. So it's very, again, as Della said, because it's the unskilled worker, the restaurant employee, the hotel employee, we're seeing less of the downturn in economy, and at least the economic bell-shaped curve. However, these are the people being affected, and we have to, something has to get done, and hopefully after the pandemic, we'll definitely see some of these businesses slowly reopen.
Mm-hmm.
Thank you, guys. Just being mindful on time, we are coming to the end, but we have a few more questions, so I wanted to read a couple more. Another question that we had is there a developer institute, so to speak, at the Enterprise Center to help us to help minorities get into the development business, into the development market?
No, the closest we have to that is a construction consortium. And part of that construction consortium are developers. Because as you know, if you are a developer, ultimately you're going to have to build or construct or revitalize something. So we focus more on the construction side of development. So if anyone is interested in that, you can reach out to me and I'll put you in contact with the team who manages those efforts.
Anastasia, I would just like to add to that, Jumpstart Germantown has a number of initiatives. They have one where you can do a local residential development, and now they just started a commercial 2.0, which is for people who are looking to become developers in the commercial space. The only issue that I'm having with it is you had to have done 10 residential developments before they'll let you into the program. So for those who are just trying to get started, I would say go into the residential side first with them, because it's a great program. I completed the Jumpstart Kensington program, and then see if you can back your way into the commercial. But they're the only ones that are in town, as Della alluded to. There aren't any, but they're the only ones that are in town that are doing something similar to that.
Yeah, and we manage the Jumpstart West efforts.
Okay.
I was going to mention the Jumpstart program too. We actually work with Impact Loan Fund to do the funding of Jumpstart programs.
Yes.
There's obviously Jumpstart Germantown, there's Jumpstart Kensington, there's a few now. Jumpstart West Philadelphia has one as well.
Yeah.
Highly recommend looking into those programs. They are very competitive to get into. But once you do get into, you do get the assistance, such as banks like Fulton, that will finance those projects. We will finance those projects as well. And
yeah, they're not just in Philadelphia, but they're also in Delaware as well.
They are, yeah.
In case we have some people that are here from Delaware or some other areas. I also went through the Jumpstart Germantown program earlier on. Now they've expanded massively, so that's great to see. There is another question. What is the threshold criteria that the bank uses to determine whether to loan to a business that is new to a particular segment of the real estate market?
So I'll take that question. So right now, it's two different questions technically in that. So when it comes to real estate, if you're a new investor, again, we look at the cash flow of the real estate, right? So what are the rents being collected? It's a little different than a startup business. If it's a startup business, I'm going to be very honest and very frank. There is SBA programs, but the SBA is really looking at everything very differently. And as of this year, earlier this year in May, SBA will no longer guarantee startup businesses, at least for now. However, we do have alternatives such as CDFIs. I know the Enterprise Center, but correct me if I'm wrong, Della, but
Yeah.
look at each individual business differently. So even though it is a startup, you may be able to qualify for a loan depending on your, on your loan, on your business operation, on your business pro forma numbers, who you are, what's your goal as a business. But from the SBA, from the bank point, the SBA will no longer do startup businesses as of May of 2020. However, that may change next year. But when it comes to real estate and real estate investment, it all comes down to, again, where the real estate is located, how much money you're looking for, how much income is producing, the real estate is producing. So any first-time investor could still qualify for a bank loan. But again, all those questions are going to be into consideration. And this is why I highly recommend reaching out to myself, reaching out to your banker, to myself, and just asking those questions and going through a scenario one by one.
Excellent. Anastasia, do you have another question, or you want me to?
The last question that I see in my chat: what is the minimum dollar you loan on investment properties, rehab, and purchase?
Can you repeat that? I'm sorry.
What is the minimum dollar amount you loan on investment properties for rehab and purchase?
So 75% of the purchase price, we will lend up to 75% of the purchase price. It could go up to 80% depending on each, again, scenario, but 75 for investment, 80% for owner occupied. And we can lend up to 100% of the renovation, again, depending on hard cost construction and soft cost constructions. Again, depending on all the labor that goes in and all the actual material and that goes into the construction. And that is something that you can, again, discuss with me case by case, but that is 75% or 80% of the purchase price and up to 100% of the renovation, depending on the deal.
I have one. Chris, were you going to add on to that? Because I see one more that we missed in the chat, and then
I have a two-pronged question. Go ahead.
Okay, really quickly, because we missed this one in the chat. Does Fulton Bank work a lot with qualified opportunity zones? If so, about what % of urban clients are in these zones?
So I did see that question, actually. Thank you for bringing that up. We do work with opportunity zones. However, I am not familiar with exactly how many our urban clients are in the zones. We don't really take that into consideration, but we do work with opportunity zones. So anybody that can come, anyone that has a need, we will be able to look at that need and work on that need.
Okay. So I have a two-pronged question. First, Della, can you tell us more about the 52nd Street project and how you're working with minority businesses for that? Because from what I understand, a lot of those buildings are not owned by people like us, other than Al owns an enormous amount over there. And I don't know of anyone else. I don't know if Big George still owns some things, and a few other African-American individuals. But that was number one. Like, how are we working with and how can we work with you as real estate professionals on areas like that of revitalization? And then two, without divulging any personal information, how have you and Fulton Bank worked together? And was it successful because the enterprise was successful in helping the business set up its structure or something of that nature?
So the
Those are two
first
parts.
question around 52nd Street, we are still in the strategy phase, right? As I mentioned earlier, we need to raise $200 million, right?
Wow.
We
Okay.
need to use about 100 million for acquisition and 100 million for renovation. So we have not started implementation yet because we're putting together a prospectus that we can go out to the capital markets to try to raise that money, right? And so, you know, as I said earlier, if you don't control the real estate, you just have an opinion, right? And you can't bring about the change. So that's where we are in step one. And about 30% of the properties on 52nd Street is owned by New York brokers. And they came down the last 5 years and they bought up property, and that's where your Family Dollar, you know, there's every name with a dollar in it on 52nd Street, right? So, you know, it's going to take cash in order to be able to wrestle those properties out from them. But I think many of them won't out because of the looting that took place the last year or so, right? So we're looking at it in the long haul, right? We're not ready yet to bring minority business to the 52nd Street because we think if we did, we'd put them out of business, right? We need to do cleanup in terms of clean and safe, getting site control, being able to give them rental abatements for a period of time, really changing the environment before we actually place them there. But one of the models that we're looking at is a model that Ben & Jerry's used in Vermont. It's called direct public offering. It really keeps you underneath the SEC in terms of and getting rid of the word gentrification and displacement by allowing residents and business owners to have part ownership of every building that we're going to do through direct public offering that is called DPO. So that's something that we're going to put in place. As it relates to our relationship with Fulton Bank, it's one thing to have the designation as a CDFI. It's a second thing to be able to use that and build relationships with banks to get capital. And so in the case of Fulton Bank, they are a capital provider to us that we borrow money from them and then turn around and reloan that capital to small businesses, right? So we take risks. Now, in our case at the Enterprise Center, what we try to do is finance small business future, right? As I mentioned earlier when I did the PowerPoint, we don't have a separate fund for real estate development. We do know how to get real estate, and I didn't hear anyone ask about the state's RCAP program, which is called the Redevelopment Capital Assistance Program. But for-profit business owners are able to put together projects of scale and work with your political leaders and submit an application for a RCAP. Because plenty for-profit developers get RCAP grants through the city, through the state. Now it's a dollar for dollar match, and it's a reimbursement program. But if you get approved, you can borrow against that, and then when you do your project, recapitalize and pay it back. So we know how to do those things and help small businesses with those efforts. But typically, the RCAP program doesn't look at a house or a building. They like to see something of significant scale.
Thank you all. We're going to do this one last question that I see in the chat because we are at 10 after and we do have to.
Anastasia?
Yes.
Remember, this goes till 2:30. We just didn't have our third guest speaker, but it's from 1 to 2:30.
Thank you. Noted.
Go ahead, you can ask a question.
So then the next question, this is the last one I have on my side in the chat. Are there abatements offered to businesses now to assist with rent or other things?
So, I'll answer this one. For the businesses that we work with, that we already are clients, we did offer deferral programs to help them. We offer 2 types of deferrals where they can do, if they have a mortgage with us, commercial mortgage, we deferred their interest or interest and principal, depending on what they need, for 3 months, and then a follow-up for an additional 3 months. So for 6 months, we were able to defer their payments. In addition, considering each business, we understand restaurants right now. We do have some restaurants that are actual customers that need more, especially with the new close down that just happened in the city of Philadelphia. We are working with our credit department to offer an additional principal and interest deferment as well. So with our current clients, with our current clients that do have commercial mortgages with us, we do offer these services right now. We are offering these services right now. You know, what happens next year, we'll hold and wait till we hear of what happens next year.
I do see another question in here. What is the minimum dollar amount you loan on investment properties, rehab, and purchase?
We covered that one.
Oh, did we? I'm sorry.
No worries. You see anything else on your side, Darlene?
I don't think so. I'm checking.
Yeah.
We talked about
I don't have anything
opportunity
else on
zones.
this side.
In 2021, yes. One more. What programs can we look forward to in 2021? How can members of real estate associations work with you?
Well, I'd like to bring up one thing that I'm not sure how many of you are sole proprietorships or corporations, and I don't know how many of you participated in the SBA PPP program in the first 2 rounds. But I would encourage you that if you didn't participate in the PPPs in the first 2 rounds, that probably under the Biden administration, and early on, there's going to be another stimulus. There was approximately 170 billion that was left over from the second CARES Act round of PPP money that didn't get deployed. And I understand they're going to add more to that. And probably the last number I heard was about 300 billion for PPP, right? And so I estimate if there's approximately 49 days to the inauguration, you figure Biden gets in, get inaugurated, probably within the next 50, 60 days, you're going to see a PPP roll out. And it's basically first come, first serve. So if you have employees, start to prep yourself and get ready with the application. You can go online to SBA's website, look at the checklist. If you got money before, you can get it again, but it's going to be probably first come, first serve. And I would say start positioning yourself to take advantage of PPP money.
That's a really good advice, Della. I'm going to second on that too. If you, or again, you or businesses you work with did not get the PPP. Also, another thing I'd advise is looking at the bank you work with. Not every bank was offering PPP. So you want to make sure you align yourself with banks that are offering PPP or financial institutions, CDFIs that are offering PPP. I know the Enterprise is doing them. I know Fulton Bank was doing them. So you want to make sure that you're aligned and again, have that checklist. You can visit sba.gov/COVID-19. And that actually has the fact check, the application, and all the items needed to get approved and to also be forgiven for the PPP funds.
Right. And in the last round, many minority businesses did not get the PPP, not because they wasn't eligible, but because it took them too long to do their paperwork. And so this is a really good time to work on your paperwork right now and know that it's coming and be ready, right? Because banks and CDFIs won't have time to help you then because they'll be in a go mode for processing. So try to get your paperwork together right now.
Awesome. So then a question that was in the chat as a follow-up, outside of paperwork, what are some things that are needed to prepare? The people can begin to do to prepare. And also, are there any grants being offered?
Well, PPP is essentially a forgivable loan. They make the loan to you and then it's forgiven. And that's the great thing about the PPP is that it helps to cover your past payroll and help you retain employees. And if you have contractors have to file their own PPP as a contractor. The last round did accept 1099s, but you didn't benefit from that because they wasn't employee. PPP is really geared for employees. And it is better if you sign up with a payroll service because that gives you verification of payroll versus writing personal checks out of your personal bank account for employees. Because if you go to a bank or come to a CDFI, they have to verify your information. So the more you separate yourself from your business, the quicker that helps you to get validated.
Here's the question, are there any courses at the Enterprise Center to help us be ready for the banking relationship?
No, but we're trying to put together a PPP prep initiative right now. You can watch our website, which is theenterprisecenter.com. You can watch it. We're trying to put that together now. We have the checklist. Max gave the website where you can get the checklist, but it's actually documents. It's not rocket science. It's basically documents you should already have in place anyway. And just start aggregating them and putting them all in a folder and getting it organized is the key.
Excellent.
There's also an additional Pennsylvania, I know PA, I can't speak for Delaware, I know there's Delaware, has allocated an additional 225 million in COVID-19 small business relief funds. That's actually being allocated at the end of, that was allocated last month. Certain CDFIs did receive it. Those grants were ranging from 5,000 to 50,000. It is a small business that has to apply. They don't have to own real estate, it's just small business. It's a first come, first serve basis. It hasn't been initiated yet. It's very, I know, I was just reading about it.
I think most of that's gone, Max.
Is that already gone? Okay, well, that was quick.
Yeah.
That was just allocated last month, the end of last month. Well, there you go.
Yeah. Well, most of those, all these initiatives are first come, first serve. And that's why you really have to have your paperwork in a go mode, so you can be first in line.
Yeah, I will speak. The PPP funds, especially the first time, even the second time, went really quick. And we had a lot of customers that did not qualify because they didn't have the right paperwork or were not even aware what they needed. So definitely recommend utilizing that checklist and having everything ready because, you know, as like Della said, when it'll come around the third time, it will be a very quick process.
Mm-hmm.
And by that time, banks will not have time to help you.
Max, could you drop that link in the chat box, the link to the checklist, please?
Yes.
Thank you.
I'm going to do that right now.
Awesome. All right. So we are about 10 minutes out from our cutoff time. And if any of our panelists have any closing remarks that you would like to give, please feel free.
The only thing I want to say in closing, I want to thank you for your time and let you know that all of the initiatives and programs at the Enterprise Center are virtual. So if you look at our website, you can participate in any of them because you don't have to go there. It's all online. We have virtual hours. We have a number of things that are taking place. And we don't look at whether you're in the real estate business or not. We look at it like a business and we'll help you from the business side of your real estate business, right? While we cannot make you a loan for a building, we certainly can help you build a capacity on the business side of your business.
Excellent.
Thank you.
And I'll leave it up to Max to loan you the money for the building.
This is Jennifer again, everyone, from Fulton Bank, the Community Outreach Officer. I'd like to thank GPAR and PMBR again sincerely, and my colleague Max, who I'm sure will have a few words as well. We sincerely appreciate the partnership with GPAR and PMBR and the opportunity to share information, about the work that we're doing in the community, whether it's on the banking or business development side or, the community outreach side. So thank you very, very much again. We greatly appreciate your partnership, and I'd like to thank all of the attendees as well.
And I'll, as well as what Jennifer said, again, thank you for giving me the time to speak. Thank you to GPAR and PMBR. Make sure I got all the acronyms correctly. And everyone on the call, on the Zoom meeting. Thank you again for great conversation, and hopefully I'm able to provide some additional tools and resources. And if anyone has any questions, I think Jennifer put my contact information in the chat. Please feel free to reach out to me. You can email or call me anytime, and I'll be more than happy. And if I don't know anything, I can always guide you. I'm very been doing this for 20 years, have a lot of contacts, so it's all about networking, right? So I can always introduce you to someone else that may be able to help you if we can't.
Great.
Awesome. Darlene, did you want to do anything closing? Or Chris,
Sure.
did we lose anybody? I can't see everybody on my screen anymore. I'm sorry, something just happened.
Yes. I'm just gonna share my screen for a minute and let everybody know that we do have websites. I want to thank everyone for coming. I thought it was a great session with lots of good information, and I would encourage everyone to go out to our participants' websites to take advantage of the virtual courses and information that the Enterprise Center has out there. And I know Fulton Bank with their Operation Hope, they're always very helpful and into the community. As I spoke, our national organization is the National Association of Real Estate Brokers. You can find out a little more about who we are and our mission statement. We do have a number of initiatives out there. I know under this particular One House Then a Car, there's some tools out there where you can utilize to find even grant programs that are available for your customers. And so that's NARAB. Our local chapter is the Philadelphia Metropolitan Board of Realtors. And this is our website. It's under phillymbr.com or .org. You can find out a little more about us, our history. You'll find our executive board out here as well, which Chris resides on, as well as, I'm the president. And also GPAR, I'm sure maybe a lot of you know where GPAR's website is, but there's information out here on their website as well. So I would encourage you to look at all of our websites for more information. And I'm just excited that we had our speakers today. As I said, I think it was great information, and you can reach out to us. I know some of you asked for slides, and those will be available. Thank you so much.
Awesome. Well, on behalf of GPAR and our diversity committee, I would like to thank everyone who participated in this by way of audience, especially our panelists. Okay. Oh, our panelists for partnering to present. Thank you to my vice chair, Annette Collier, to Rachel Murphy Richards for pitching in. Thank you to Darlene and Chris from PMBR. And I will let Matt send us out of here.
Okay, nothing more to say except for thanks to everybody. Great session today. And thank you very much again to Bright MLS for helping us to make today possible. So everybody, look forward to seeing more of you on future sessions that we do. And with that, take care, and we'll see you next time.
All right, bye-bye.
Thank you all.
Mhm.